Welcome back. Thank you for staying with us. As school season has already kicked in, many families are finding themselves turning to credit providers to make ends meet. The rise in borrowing is being attributed to the financial strain that the school-going season places on households. The Eswatini Credit Providers Association has seen more Eswatini coming in to borrow personal loans this month. With the different credit providers charging different interests to their clients, business journalist Nelson Amandla had a conversation with the chairperson Tulani Dlamini to gain an insight on what informs these varying interest rates.
Chairperson, has there been an increase in loans this January, and what kind of loans are in demand?
Is a lot of parents, guardians going for educational requirements, and therefore they have to pay school fees, tuition fees, and other related elements. And therefore, definitely, even if we look at previous periods, this is normally the peak in terms of the 4 quarters within the year. Every year, within January to March, there is an upswing in terms of loan applications. Economic conditions play a significant role in loan demand. When times are tough, more people turn to credit. And therefore, for instance, right now, we're talking of school fees and household needs. And therefore, it is very important that both parties, in terms of the lender, which is us, as well as the client, to make sure that we advocate for responsible borrowing and lending so that people do not become financially overburdened over time. So we have to make sure that a thorough onboarding process and due diligence is taken care of. In terms of what we do, being the guys in the microfinance space, we normally focus mainly on personal loans, which normally ranges from across industry, from 2,000 emalangeni all the way up to 500,000 emalangeni. And therefore, with such an amount, one can do almost anything that he or she wants to do.
As you have said, Chairperson, that most people have come in to borrow loans this January, I just want to know who determines how much a credit provider should charge, because you have one credit provider charging maybe 20% and another charges maybe 24%. What happens there? Do you have a way to monitor that?
Okay, first of all, let me explain and say that in terms of pricing, definitely each and every entity sits down, gets to decide on its actual pricing. And remember, as industry, definitely it's not in our space to discuss such amongst us, but it's upon each entity. And this, in a way, sits well within the regulator space in terms of saying, within industry, these are the brackets or tiers where you can charge within. And therefore, we charge differently. But of course, we are waiting for a notice from the regulator in due course, and I'm sure it's about to go to Parliament, where the regulator will actually specify the parameters in terms of pricing for the microfinance space. So it's coming through soon.
So you are saying there's currently no guideline to monitor how much the credit providers should charge?
Currently, there is a draft notice that was circulated by the regulator. And those are the parameters that we are currently using as industry. We are waiting for the final adopted pricing ranges that will be issued by the regulator.
You are saying there is a guideline. What does it say about the interest? How much should it be?
In terms of the last draft, that was, maybe it's better also to ask the regulator in terms of that, because this is something not yet finalized. Once the final draft has been issued, it's only then it can be advised accordingly. But in terms of the current setup, the last draft went up to overall charges up to 24% within industry per annum. That was the last draft that we have.
Inflation is hitting Eswatini hard, Ngozi. This is evidenced by non-performing loans when we look at the banking sector. Are you doing something as credit providers to cater for this, to cater for people who are struggling, but they also need the money from credit providers?
Okay, let me start by saying, in terms of that area, as industry, we promote what we call financial literacy. So, meaning for any client, before he or she gets to come through a lender, he must make the correct financial decisions in terms of making sure that indeed that facility is required. And also, as we sit down with that person, we have to make sure that the client is not fully over indebted in terms of what is required as the facility. Obviously, in terms of interest rates, there are a number of factors that comes into issues. In particular, one, inflation. That's one of the factors there. And from our end, we do believe as entities, we are engaging the clients, in particular at the onboarding stage, where we get to fully assess affordability for the client. And that is how we work.
What is it that you are doing to ensure that people borrow within their means?
The main thing is to do a formal and a full onboarding assessment to make sure that the client is able to afford the installment or repayment amount. In the event he or she gets to have challenges, and then the client gets to sit down with the entity in question, where options like the debt restructuring process gets to kick in, and hence improve probably the take home for the client.
Thank you, Nkosi, for joining us on the program. We are hoping that you will find a standard interest rates that every credit provider should charge. Kude emaswati asitakale kangcono angadikhanzi sekakhameka ngendzaba yetikweleti.
Whereas the Financial Services Regulatory Authority has responded to say the Consumer Credit Act doesn't stipulate the interest rate to be charged by credit providers. The FSRA is awaiting the approval of CCA regulations by Parliament, which will have a section on how much interest can be charged by credit providers. They say currently they rely on the credit agreement, which is essential for establishing trust and ensuring that both the borrower and lender are on the same page regarding the loan's terms. They say it documents all the essential terms of the loan, including the interest rate, repayment schedule, fees, and any penalties for late payments. The authority is also in the final stages of completing a survey on pricing by credit providers, which will serve as a key reference in formulating regulations on the total cost of credit. After the break, we connect with Sanellis Bia for today's financial markets. Don't go anywhere.